There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processes.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Futures are positive as the markets had the weekend to digest. Earnings season kicks off this week. What will traders learn from companies' reports? Can the markets regain their footing? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are higher this morning, and stocks were able to pare most of their losses before the end of Friday's session. Today, of course, kicks off earnings season. So as we've taken the jobs number in stride so far, do you think we'll continue to do so?
I think the next few sessions are going to be pretty important. You know, last week we started to see some faulty signals, and on Wednesday we actually had a potent down move. I think Thursday guys tried to short the market. That's why there's a lot of frustration out there, just the way things are evolving. Wednesday we had a potent down move. Thursday is when all the traders wanted to be short because they figured you'd get some follow through. There wasn't. And then Friday you get the big down move with the disappointing jobs number. But if you shorted after the open on Friday, you lost money again. So even if you want to be short, you have to like sit through it. And you know, it's been better to actually buy in the hole versus shorting and pressing. So just one of those time frames where people are just kind of unsure. No one wants to sink their teeth in the short side. And at this point, we've had such a big run,
right.
Why be so overly long?
Right, yeah, it's a tough spot to manage. So what are the key levels that you're watching in the S&P?
Well, we talked about that 1538 to 1542 area to watch on Friday. And if you look here at the chart, you will see we did hold that, early in the morning. There are trends that we follow, and I love to talk about trends because everyone approaches the market differently. Here is the macro trend, okay, that started on November 16th with this red dog reversal. From there, we touched it, after the fiscal cliff, little pullback, touched it again here. This is when Italy was having their election problems, and then here we are touching it on the jobs number. Okay, but if you're an active trader and you follow the accelerated trend, all right, here was this trend that on that Italian elections broke right here, which gave you a move from about 1530 down to 1485. So what was that, 45 handles? Then we resumed, took out 1530. Then we've been slowly crawling to the upside. This is the Cyprus volatility. Look how minor that was compared to what took place here. And then this was the recent activity with North Korea and with the jobs number. So from the highs here of 1573 to the lows of 1539, not that much of a pull-in. So now I think the bears would like to see a right shoulder right here get put in place, and develop, and that would be a lower high. And then what you would also have is a neckline that comes in right here. So this is what I think that they're hanging their hats on. But if we start taking out 1562 and we close above it, and we saw that pivot hold in a lot of the weaker sectors, they're going to have another problem and another decision to make.
We talk a lot about clues in this market and things that we can watch for as today kicks off earnings season with Alcoa. How much of a barometer of earnings season really is Alcoa? How much does it mean?
You'll hear about it all day long on every major media network, but it really doesn't mean much. Like you look at the chart of Alcoa and you'll see it's been a non-event, for a long time. You go, take the, actually I was just going to before, since what is this, almost 2 years that it went from like 12 all the way down to the lows here of 8 and change. So if the stock market was hitting all-time highs and you have Alcoa in the doghouse like this, does it really mean much? Anyway, if you look where it is now, I don't think the street's expecting anything here whatsoever, at all positive. You do have a big macro support coming in at $8. So, I think they're expecting a dime, which is what they had last time. It really isn't that important. I think what's more important this week is going to be the Fed minutes on Wednesday, bank earnings on Friday, and then when tech starts rolling in the week after.
All right, so maybe we're not looking to Alcoa, but we could look to sectors like the financials. We know the financials are a key area to look at to measure the strength of the broader market. And the XLF breached its 50-day moving average on Friday, so should we be prepared for lower prices?
Well, it breached it and then wound up coming back above it. So it's first time you get there, typically it holds. We've seen some weaker action in actually individual financials, not exactly the XLF. So if you look here, at this ETF that is a proxy for the financials, you will see it did break this upper area, but it held the 50 days. So I think for the XLF, what you want to do is you want to see how it reclaims, or if it can or can't reclaim this 1820 area. I think Goldman's been a great barometer for the financials. We talked about it many times. This is when Goldman broke this 150 area, and I think a lot of traders made some money short here. Right? You had this was your accelerated trend, broke to the downside, lower high. That was a pivot. Then it broke below the 50-day, was never able to reclaim it, and then finally you saw a bounce Friday. I'm actually long Goldman from Friday, and I think it'll be important to see what type of bounce it has. Does it get back up to 140, 5 to 147? I think so, and I think a trader like me, I'll hold it here and sell it into that area, and then if I can reclaim it, I'll stay with it. I know I also added to my Bank of America on Friday. Still, it had a little breakout failure right here, but overall, I still think it's somewhat healthy. Granted, you look at the move that from $8 and then from $9.95 and then from $11.65. Now it's just creating another base to absorb, this type of activity. As of right now, it's now held the mid portion of it, right? If you want to put a big channel here, it held the mid portion, and now we'll see, how it deals with 12.10 to 12.25-ish. But overall, I think the financials are just resting. There's profit taking. It's been a heck of a run, and I don't think the highs are in for some of them this year.
All right. Well, let's keep checking the temperature of the different sectors and check in on the industrials. The XLI broke below its 50-day on Wednesday, and we saw downside follow through there on Friday. So do you think its 50-day could now become the new resistance level?
Yes. So if you break through a key moving average, then you usually go back and back test it, and then you need to see if it reclaims it, and that was like a sell setup, or if it has validity. And if you look here at the industrials, which has been a very strong group, here was that trend line back from November, broke below it. But then if you go a little bit further back and you look at support, you have two different support levels. This is a bit more macro, so it's still held above it, closing the highs here. So now the question is, can it reclaim this area? So if you were looking long and you got long Friday into this down move, I would say sell some into this zone. And if you're looking to re-short because you covered after multiple down days, this would be the area, and that's the line in the sand that the bears are going to want to defend.
Now, the home builders actually paired losses the best on Friday. So do you think we could see this group continue to outperform the market?
I'd like to. I actually went long. I was long on Thursday, and then I traded it on Friday, and I'm still on the home builders, thinking that it's been a leadership group. It's at macro support. Got to give it a try there. It did break its accelerated trend line, which we have shown here twice, but each time it's done that, it's held higher. Here is your macro trend line that we came into, so it became a nice trade if you took it on Friday. Here's the first time it broke its accelerated trend line in 2013, came into macro support, then regrouped, made new highs, and then here at a higher level broke its accelerated trend line, came into macro support. This time felt a little bit different, but overall it held. So here too, same story. Look at this broken area. Look at like 29.50. I know right now we're at 28.91. I'm long some. I'm going to probably just piece it out right into there and then see whether it reclaims it or it gets rejected. Last time, it hit here, held higher, it busted through. So we'll see what happens this time around.
Well, we talked a lot about the weakness in the Russell as of late, and it's trying to reclaim the 50-day after Friday's intraday rally. But how weak does it still look to you?
This actually was a bit weaker than the other sectors, in my opinion, because when you have a dismal jobs number and growth is hard to find, and everyone's looking for really yield, or a combination of a little growth and yield. The Russell's not where it is. The Russell's like super growth, and right now we're not in like a super growth environment. Same way technology is not, a barn burning sector right now. But anyway, it did hold this area. It closed relatively well. If it were to break back above the 50-day, I think this area is going to be big resistance. So here is your somewhat of a tradable, easy bounce if it wants to bounce. And then this is where some guys are going to be looking to reshort. It broke this upper area. This was that engulfing day on Monday. Here's when you could have added to shorts or got a little flexible. And then always, like I say, 3 down days, you cover a little bit and you test it. This is your resistance where in the Russell.
All right, coming up, we're going to go in the trenches with high beta tech, which has been a little bit of a mixed bag. But first, quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our 2 very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and talking high beta tech, which has been a bit of a mixed bag. We have some haves, we have some have-nots. And let's start with Apple, which of course has been showing relative weakness. It managed to hold that key level of 419 though on Friday. So is it getting ready for a bounce, or was that just a pause?
I think there's been many times during this big decline, there's been actionable areas where traders get excited because when there are pivot points, there's opportunity. And if you look at the chart real quickly of Apple, from the head and shoulders top right here where it broke support to where it broke this trend line, and now you fast forward all the way down to some of this more macro support, everyone's looking for something to do here. You don't want to get squeezed if you're short or stayed too long, and also as a long, you have to be very meticulous. Last time we traded this from the long side really was right around here when you had this descending trend line. We were targeting, we did the call spread. Remember being a buyer right around 435, 440, gave you a quick move, then went again through the 50-day, hit 469. That's when we took off the last call spread, actually did decent with it. But then we talked about, can it continue to show commitment? Can it hold the 50-day? And it didn't. So, fast forward to where it is right now. There are a lot of people saying a few different things about Apple. We still have about 2 weeks until earnings, so there's a lot of time between now and then. So here's the low here, 419.69, just a little bit above this 419 low. It's gapping up a little bit. You do have some resistance now at 431. I would say, today, tomorrow, pretty important. If Apple does not get back above this little trend line here and gets rejected and goes negative today, I think the next time it hits this 419, it's not gonna, that thread's not gonna be that strong. Yes, and then we could see 400 or lower. So at this point, maybe it tries to go again, but if it gets rejected by this 430 area, next time it sees 419, it could trigger a lot of stops to the downside.
Might not be so pretty.
No. The iPhone's pretty though.
Well, another one showing some relative weakness is Google. It lost the support of its 50-day. So what are the levels you're watching there?
This, again, the curse of the $1,000 price target. It went above 800, it was holding above 830, 840, and then all of a sudden started slipping. Nobody's obsessing over it, but silently, Google is now down 65 points or so off the high. So you look here at the chart, as far as what to do here, this has been a nice trending stock this year. Okay, here's when it gapped up, didn't fill it. Here's when it took out last year's highs, and it was basically trending this entire time until finally this upper level flag that I was trying to put in place failed. Okay, then I know I tried buying this to break this downtrend for it to resume, and it went for 2 days and then failed. Again, you don't want to see a breakout failure. Like here, look at this 2-day move, boom. And finally, it still was kind of weak Friday, but it came off the lows. So I think at this point, if you were trading it for a bounce before earnings, maybe it fills this gap. But I think this now is also just a trade. So with that said, I would wait for a bigger strategy, come earnings, which still isn't for a little bit. So, but at this point on a micro level, if it were to trade above Friday's high of this 786, you could get a gap fill to 790 or so, but then another area of very big resistance. This is just trending lower for now. Stocks like to trend. This trended up, and then now we're coming in, and I would say this is your point of reference right here too. You have 776, but I think it's just going to chop around for a while.
All right, well, from a have-not to a have, LinkedIn is acting better than its peers, or most of its peers at least, on Thursday and Friday. It closed right around its 8 and 21-day moving averages most recently, so now we just have to see if it can get there, right, and reach them?
Yeah, something like that. Everyone approaches things differently. LinkedIn had a huge move from earnings. It's been a great macro, long in the draw, so to speak, from its IPO over the past 2 years. But lately, momentum guys like to stick around if there's momentum. And this stock just failed to break out the way or failed to have the power that it had, a month or so before. But we're also in a different market. You look here at LinkedIn, and you will see, this overall trend right now is still pretty strong. This was the last breakout that it held, right? But so, yes, it could make new highs and go nuts, but I don't think many things are in this market. So right now, this was your earnings gap. Here was your flag. It continued. And now from there, it's just basing. It's still above the 50-day. There are a lot of other stocks that have got crushed through the 50-day. So on a macro sense, that's important. But I just think that it's just going to be choppy, probably going to earnings. We still have 4 weeks till earnings. So I wouldn't make a big bet if you're in it for a macro play. You look at the monthly chart here, there's no reason right now to get out of the way. This was the break above 130 last quarter, and now it's just trying to base above this huge wide range bar, which sometimes takes a nice amount of time to absorb. So I think that there is bigger pastures out there for LinkedIn at some particular point, but right now it's going to have to, on a macro sense, absorb the massive move it's already had.
Well, Netflix is one of those stocks that broke below its 50-day, broke below it on Wednesday, and traded at lows on Thursday and Friday. So should we be prepared for more downside action today?
This one also, it's a momentum name. So, when guys don't have momentum, they leave. And this one tried, I think when I was going on out to the West Coast, I was long Netflix. It looked like it was going to break above 195 and go to 200, and I was long it. I'm like, let me just sell some above 195. And then I got off the plane. I'm like, what's this doing back down below 190? I'm like, that shouldn't have happened if it was strong. And then PS, you look at the chart now, it's a lot lower. So you have to be very careful with momentum names because they change quickly. Last time I tried to go was right here. This was a nice breakout move. You tried it a few times and failed up here, showing you that I wasn't ready to just get up and go through these highs. So this was your last time it tried, and then failed right there. Then you had your upper level flag that wound up getting stopped out if you have tight stops. And then this is when some people actually looked short, right? It took out this entire support range. Why not? Then it broke through the 50-day. It tried to hold a little bit on Friday, but it still had no power. Here's your gap there. Overall, still on the year, up a lot. At this particular point, though, I just feel like there's going to be so much resistance coming into this area that it's really just on my B or C list now. It's not that tight.
All right, what list is Facebook on of yours? It's been acting a bit better, broke above its downtrend.
Facebook, sometimes it friends me, sometimes it defriends me. Beginning of the year, I was on the friend list.
Right.
It went from 28 to almost 31, and then after earnings last quarter, it's just been drip drabby all the way down. I did get long last week. When it started acting better, it triggered above 26.5. You want to look at the chart. I'm not getting too excited here. I'm not saying go to the races and start loading up on Facebook, but overall, I still think I do have this cup and handle macro pattern that's taking a lot of time to work out. We're now in this descending channel portion where it just broke above. So I am long it, and I'm going to stay long it as long as it stays above this trend line. It's got to stay above, just say 26.60 for me to keep interested. Then at some point, perhaps it really reclaims the 50-day with some power, and then you really have a nice amount of room back to 30. So at this point, it is acting better for itself. It's been very choppy during this road down to this retest of this support. So I would stay in it as long as it shows you commitment, and right now it's showing some commitment.
All right, let's do a quick check-in on gold. The GLD got a bounce on Friday, posted a decent gain of 1.7%. So could this be a sign of a bigger bounce to come?
Could this be it? Could the gold bugs get out of their nest? Or no, they're in
Gold bugs?
Bugs, whatever.
We'll think about it.
We'll think about it. We'll be back with where they hide out. But they've been hiding lately, and rightly so, because it's been a frustrating area to be long gold. The macro gold guys definitely, we're feeling it a little bit coming into late last week. We talked about, GLD 148 to 150 is a macro zone that needs to hold because the intermediate level didn't. You go to the chart here, this was the intermediate area that we were all getting, looking forward to, or we were focusing on, and then it broke below. That was 160, 161. Came down, we started talking about this more macro support. GLD was coming into a macro area that, if guys who own gold for multiple years were like, okay, I didn't really care about this noisy range in here because it's just consolidating a huge move we've seen over the last decade. But once you start getting into a key area, if it were to break this 148, 150, you have another move down to 140 or lower. But what happened on Friday with the jobs number is it gave it some juice again, became the golden place to be. Haha, just kidding. Anyway, here's your gap up. You have another gap in front of it. It's still in this lower range, so there's still nothing that exciting here. If it wants to build, I would say do something different. Hold higher, hold above this 151. Maybe you get a quick little cash flow trade to fill this gap, but overall, still trapped in a downtrend, trying to hang on to the macro support by a thread. We'll wait and see. What about GDX now that put in a red dog reversal on Thursday? It did fail at the 8-day on Friday, but do you think that reversal could lead to a bigger rally? Gold guys are looking for it. Every time that red dog was that a red dog reversal. I'm like, how many times could this happen in the GDX? One time it will stick. You know, I don't like this group because this group always gets me. I always try and get long some gold miners, and then, you know, a mine blow ups or someone nationalizes something, and it's just difficult. But anyway, you look here at the GDX and you'll see, you know, it's been, you know, look at this downtrend. It's just been stuck so far in it. You know, it is below. This was the last time we tried playing it, I think right around here, and it failed. Here it was a red dog reversal, okay, you know, you wanted to play for a day and a half move. Well, here's your day and a half move. So I would say in order for this to have any choice or any reason to keep going, it should hold at least half of it. If it starts giving this back, then it's still very weak. Every time it tries to go, it breaks to the downside. I think you need something so blaring there to make a change versus just these slight subtleties.
Right. Well, we know that we're going to be hearing a lot about Alcoa today. We do have it later after the close. So what will you be paying attention to? I know you're not that worried about that in particular. What will you be paying attention to today?
Well, today I think the market's going to try and bounce and have some follow through to Friday's reversal. We opened on the lows, closed on the highs, we're up a little bit. I'm sure some traders are going to try and short the bounce at some point. If you start too early, you're probably not going to be able to stick with it. If you're a little bit meticulous, maybe that's the right thing to do. You know, we went over levels that you could trade a bounce long and then maybe get out and then see if it gets rejected. And if you did cover your shorts into Friday and was short early in the week, you have the luxury of re-shorting into some of those areas. But again, do it with a plan. Last time this happened after the Italian elections, it came up to the area, held there, and then busted through and then rolled to new highs. I'm not sure if it's going to happen this time. You know, if we look at where we're at as far as the market, last quarter, double digits, right, in most indices. So I don't think we could expect that again. So we should have some kind of corrective activity longer than just a week. And what it leads to, we have our levels and we should just measure them.
All right, sounds good. Have a great day, everybody. Happy trading.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.